Hi everyone, Kathleen here, the Research Director at XTB. We're well and truly in the second quarter now, and the focus is turning to earnings season. After an inauspicious start to Q2, stock markets are looking to earnings season to give them direction. The major US banks kick things off this Friday when JP Morgan, Citi and Wells Fargo all release earnings, with the all-important tech sector not releasing earnings until later this month. Analyst expectations are important when it comes to earnings season. After a blistering rally in Q1, analysts have scaled back their earnings expectations as caution has crept back into the market. The S&P 500's financial sector is expected to see earnings contract slightly for Q1. However, the performance is set to be uneven. Net interest income will be in focus. JP Morgan's net interest income rose by 19% in Q4 and is expected to rise by nearly 12% this quarter. However, trading revenue could be a weak spot in Q1 for the biggest US bank. The market expects trading revenue to fall nearly 8% in Q1. Other banks are also expected to register weak trading revenue, although Wells Fargo could buck this trend. Loan loss provisions and forward guidance are also worth watching closely. The non-performing loan ratio at JP Morgan is expected to be 0.52% for Q1, the same rate as Q4. The other major global banks are expected to see similar levels of loan loss ratios. Any uptick in the bad loan rate could be seen as a sign that the economy is heading for a hard landing. However, a weak bad loan rate is also a sign of economic strength in the US, which may be a factor in the Fed holding off from cutting rates in the near term. This earnings season is important as it comes at a delicate time for market sentiment. Treasury yields are at their highest level since November, and US stocks had a mixed performance last week and ended the week in the red. If the market's going to move higher, then it may take actual earnings growth and corporate profits to underpin the next leg higher for stocks. The tech giants like Apple, Nvidia and Microsoft are expected to steal the spotlight yet again, and earnings growth is expected to surge by 38% in Q1. Analysts are not only bullish on the tech sector, but utilities and healthcare are also expected to have done well and registered decent profit growth. If we get decent profit growth in Q1, this could help calm markets. This week also sees an ECB meeting. No changes expected, but the ECB could signal a rate cut in June, which may also boost the market mood. That's it for now. See you next time.